Hey everyone, Koch Investor back on our earnings video. So Roblox is down 20% after reporting earnings. What exactly has happened? Is this a time to pick up some shares? Maybe open a position if you're interested in that, if it was on your watch list for a while. So I'll explain all that in this video. I'll start by already giving you the two main points as to why it's down 20%. In my opinion, 1, daily active users are down quarter over quarter. 2, they keep losing money. There's no clear path right now where we see this become much better. Previously, free cash flow was positive. Now, it is negative. Operating expenses are still high. So what exactly is going on here? So let's start and have a look at the headline numbers and a couple of comments from the CEO. So first up, revenue increased 15% year over year. Bookings increased 22% year over year. Now, bookings, they say, is more important to understand how the company is actually performing. And there is an explanation as to why, and I agree with that. So if we go to this slide right here, they basically explain revenue, deferred revenue, and bookings illustration. So let's say a user spends $30 on the Roblox platform to purchase 3,000 Robux or purchases a $30 prepaid card to exchange for 3,000 Robux. So bookings recognized is $30 here. Then durable virtual items, that equals 2,800 Robux or $28. Now they do this calculation here for the GAAP revenue recognition. So $28 divided by 28 months, that's the average lifetime of a paying user, and that equals $1 per month. Now if you look here on the right, so revenue recognized, just $1, but deferred revenue at the end of month 1 equals $27. And so we go to the next one here, consumable virtual items, 200 Robux or $2. So GAAP revenue recognition, $2 bookings in month of purchase. And then here, month 1, revenue recognized, $2. So recognized in month 1, total revenue recognized is only $3 plus deferred revenue, $27. And so bookings is $30. And this is why you should look at booking to get a better, let's say, perception of what exactly has gone on. Because if you only look at revenue, well, you're missing out on $27 that will eventually be spent on the platform. Then net loss attributable to common stockholder, $282.8 million. Net cash provided by operating activities, that is positive $28.4 million. Then average daily active users, 65.5 million. That's up 25% year over year again. Good, but on a quarter over quarter basis, it is down. So the market is basically thinking, look, quarter over quarter, you're not growing. Yes, year over year, you're growing 25%, but your aspirations is still 1 billion users. Now, how we will reach that number if right now already you're losing users quarter over quarter? Fair question. Then average monthly unique payers were 13.5 million, up 19% year over year. Hours engaged, up 24% year over year. Then average booking per daily active users, down 3% year over year. And average bookings per monthly unique payer was up 3% year over year. Now, a couple of comments here from the CEO and CFO. So we continue to drive higher rates of organic growth in daily active users, hours, and bookings. We are growing among users of all ages across all geographies. We remain focused on extending our product leadership to drive value for creators and brands and even more innovative and immersive avatars and experiences for our users. As for the CFO, this is our second consecutive quarter with year-over-year bookings growth in the low 20s. During the quarter, we also built the plans that we believe will enable us to generate operating leverage against infrastructure and trust and safety spend starting next quarter and against compensation expense starting in the first quarter of 2024. So this already answers one of the questions here. When will we see a reacceleration, let's say, towards profitability? Now, when it comes to growth in the age segments, so they say here that as for the daily active users hours, that grew across all ages with those aged 13 and over growing faster than those under the age of 13 and in all geographies. Now, with regards to this point, this is a point that I've made at the start when I started looking at Roblox. It makes sense because the majority of their users were 13 years or younger. And so as the years go by, these users suddenly go in the category of 13 and over. And of course, they'll still be playing the platform. So now the question becomes, are they still attracting younger users? And what about the users that are over, let's say, 19, 20 years old? Are they spending more time on the platform? Are they spending their money on the platform? Yes or no? Then when it comes to a specific thing that makes Roblox special, unlike any other video game out there, in Q2 they enabled creators to publish items with limited supply known as UGC limited, user-generated content. Over 900 creators have published limited items, and we have already seen a positive impact on our top line because these limited items tend to sell at significant price premiums. So for example, your favorite creator creates a game in Roblox. Then, let's say it's a fighting game or whatnot, he releases a limited edition sword, only 200 available. Of course, most of his hardcore fans will just rush, buy Robux and buy that item because that item will be rare, and then maybe in the future you'll be able to sell that item for more Robuxes and profit from that. Now, with regards to the point of expenses, when will expenses get under control? What's going to happen there? So if you look at this slide right here, you see total cost and expenses much higher than revenue. And so this is why you look at loss from operations, it's a negative $313 million. And then of course, net loss attributable to common stockholders, as we said before, $282 million. They need to get those expenses under control. One of the examples, developer exchange fees, still increasing 16% year over year. Although yes, it is down quarter over quarter, in my opinion, still too high, especially if you look at the growth rates between this and revenue. But then again, we have to look at bookings. But the overall picture is this. The company, yes, is growing, but expenses are growing at approximately the same pace as well. And so if you're looking at free cash flow, for example, of course, during the pandemic period, everything was great. But then coming out of the pandemic, well, this is a complete different picture. And this is really not what you want to see. And so if we're going to look at the graph right now, you can see big red candle on a weekly basis. Previously, what was a support was around $25, $26 or so. So if you want to wait to see if it goes up until that previous support line, go ahead. If you're looking at this, look, you can start the position now at $30. If it drops a bit more, at dollar cost average and see where we go from there. Currently, RSI is not oversold on the weekly. On the daily, it is oversold. MACD is bearish here on the weekly and of course on the daily as well. So in my opinion, I think there is opportunity for the long term if you're picking up shares between $25 and $30 right now. But keep an eye on profitability. If they can turn free cash flow negative into free cash flow positive, yes, things will get much better. But expenses need to get under control. Overall, Roblox still remains an extremely popular platform. Yes, it will continue to grow in users, in revenue, and in bookings, but expenses need to get under control. Whether or not they'll reach that 1 billion goal, I don't know. But from now to the 1 billion, there is a long way to go and a lot of upside for long-term investors. So that will be it for this video. Of course, do share your thoughts down in the comments below. Are you planning on buying, selling Roblox? Let me know down in the comments. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.